YouTube link. Okay, yeah, please confirm you can see my screen, please. Please confirm you can see my screen. Okay, good. Thank you so much. And so right away, we are taking our movement right away and start treating the questions that we need to treat. 9 o'clock. 9. So we'll be looking at this question. Sorry, the way I screenshot it, the way I tried to match the screenshot didn't align very well. So I will have to be the one to read this question, because anybody that wants to read it may not be able to understand it properly. Okay. So this is the question on company income tax, and we'll read through it as fast as we can. Then we'll try and solve it properly. So he said that Mr. Danko Chinyere, who has worked in a neighboring African country for many years. I wasn't in class. Can I still catch up? You can catch up now. You can catch up. So who has worked in a neighboring African countries? They said he returned to Nigeria in August 2018. He incorporated a private limited company known as Shidan Limited in Lagos on October 30, 2018. October 30, 2018. The company deals in processing and packaging of plantain chips for local consumption. The directors of the company opened a business account with one of the leading commercial banks in November 2018. The company commenced full operations on January 2, 2019. Your firm, Adama & Co., was appointed as tax consultant to Shidan Limited in January 2021. At the first engagement meeting with the company, you discovered, excuse me, please. You discovered that the company was yet to register with FRS. Relevant taxes, including VAT, value-added tax, were not remitted to FRS. An extract of the company's first set of financial statement made up to 31st December 2020 are as follows. We have the gross turnover. You can see that gross turnover is 860,250,000 naira. What is this telling you? That this company is a large size company. This company is a large size company. Then from the items that you have in the question, you have to be picking which items are we going to disallow, which items should be allowed, and also which items should be a non-taxable income from all this stuff that you are seeing on the screen. We have gross profit. We have profit on sale on disposal of PPE. Then the administrative expenses. We have salaries and wages. We have directors' remuneration. We have electricity and generator running expenses. We have rent and rates. We have repairs and renewals. We have motor vehicle expenses, donations and subscriptions, interest and bank charges. We have bad and doubtful debts. We have miscellaneous expenses. We have loss of funds. We have audit fees. we have legal and professional charges, then we have depreciation, and we have the net profit. Then they now give you additional information. What is the additional information? Number one, it says that donation and subscription includes the following. I would have loved to unmute everybody to hear from each one of us or from someone, which of the expense are we supposed to disallow from this? Don't forget, I told you, you have to know your WREN very well. What does it mean? Only reasonably, exclusively, and necessarily spent to do what? To generate income. Then when it comes to donations, there are some companies, there is the list of these donations where a company can make donations to, and it will be allowed as an expenses in tax. But, and also anyone that you did not see in the list of that, in the list where a company that make donations to will be disallowed when it comes to tax. So with the understanding of what you have, with what you have shared with us on the list of companies that the donations can be made, from this Roman figure 1, donations and subscription, we have Lagos Chamber of Commerce, we have Motor Boat Club, we have Polo Club, we have political parties, and we have approved National Relief Fund. You can drop it as a chart for me. Which of the expense should we disallow from this? In the next 2 minutes, please. Which of the expense should we disallow? Okay, let me unmute. Let me allow you guys to unmute, but just one person can talk, please. I don't want echo. Okay. So which of the expense do you think we should disallow from this Roman figure 1? Okay. Somebody is saying political parties. Okay, Oriade, you can speak, please. Oriade, you can speak, please.
Yes. Okay, sir. Motor Boat Club is a disallowed expenses. Polo Club and a political party is there, sir.
Okay, thank you. What of the approved National Relief Fund? The approved National Relief Fund, that one should be allowed.
No, that one should be allowed, sir.
That one should be allowed. Then Lagos Chamber of Commerce, that one also should be allowed.
No. It's a disallowable expenses, sir.
Which one?
The one of
the company belongs to Lagos State Chamber of Commerce, and it paid the subscription.
Okay.
So it should be allowed. It's just like me paying subscription of ICANN for all my staff. And you are telling you, so that one should be allowed too now. Okay?
Yes.
Okay, thank you. So let's go to the next one. But from these expenses that you see here, that you are seeing now, which one should we disallow without not even looking at the additional notes? Which one should we disallow? Anybody can talk? Okay. Okay, Olamide Adedeji.
Provision for doubtful debt. Provision for doubtful debt.
Loss of funds.
Loss of funds. Okay, thank you. Depreciation. Loss of funds. The bad and doubtful debt. That one we need to look at the additional information before you can disallow it. Don't forget I told us. Please, can this person mute? Okay. Don't forget I told us that when it comes to provision for doubtful debt, the one that is allowed is specific. The one that is disallowed is general. But if in a question they just put provisions for bad and doubtful debt, they didn't mention which one is specific, which one is general. What do? You disallow it immediately. I told you that
you assume that it's general and disallow it.
Yes, you'll be thinking like a tax authority person. So don't go and be stressing yourself that you want to send me to the company. Which one is this and this? So you disallow it immediately. Okay. So let's move on. Roman figure 2. Yeah, the bad debts. This is not the breakdown of the.
So what of the loss of fund?
We'll get there. We'll get to the loss of fund. Are you using 2 phones, Mr. Raphael? Okay, for allowance for bad and doubtful debt, they said it consists of the following. We have they call one allowance for doubtful debt, they call one specific provision, and they call one bad debt written off. So no wasting of time. The one of 3 million naira allowance for doubtful debt, we are going to disallow it. We are going to disallow it. Then the next one, miscellaneous expenses. It includes the following: court fine, exchange loss on remittance and balances, then allowable office expenses. Which one should we disallow?
Exchange loss.
Why do you want to disallow exchange loss?
Court fine.
Also court fine is a penalty.
Court fine should be allowed.
Okay. Please, the person that mentioned exchange loss, why do you want to disallow exchange loss?
Well, we don't know whether it's realized or unrealized one. If it's unrealized, we
No, if it is
disallow it.
unrealized, they will tell you now. But this one is a realized one. So far, they put the exchange loss on remittances and balances. I can't get dollar from the government. I have to go to black market and buy. So the official rate that I'm quoting my transaction is not what the rate that I bought the dollar. So that one should be allowed. Okay, that one should be allowed. Okay. So a director defrauded the company to the tune of 9.8 million naira. Are we disallowing it or are we allowing it?
Disallowable.
Disallow it.
Disallowable.
Yeah, they should go and use the FCC to pursue their recovery of the money. Nothing concerns us with that one. Okay. Okay. Legal and professional charges include the following: debt collection and retainership fees. Then we have land acquisition. Are we allowing the two or are we anyone?
We are
Disallow land
allowing
acquisition.
debt collection, and we are disallowing land acquisition.
Okay, we are disallowing land acquisition.
Acquisition,
Why
yes.
are we disallowing land acquisition?
Because it is of capital expenditure.
Oh, God bless you. God bless you. God bless you for that one. It is an expenses that is capital in nature. Because when you did land acquisition, any legal expenses that you incur on that land, go and add it as part of cost of the land. Okay? So capital allowance, as agreed with the revenue, is 30,380,000 naira. So this is the requirement. What is the due date for submission of audited financial statement to the tax office? 2 marks. I'm sure you know that.
Yes, June every year.
Eh? Repeat that what you said.
6 months after the day of whatever.
After the end of accounting.
After the company year end.
Yes,
6 months after the company year end. Bonus 2 marks. What are the requirements for filing of VAT returns and remittance of VAT liabilities? I'm not interested in that though. I'm not interested in that. I'm interested in actually D. But C, what basis of assessment on commencement of business? Section 29, section 3 of CETA as amended. I think they want you to talk about that. So I believe it's what everybody can answer. So my main interest is the income tax payable for the relevant year of assessment. So please, I think I'm going to meet everybody shortly so that I can quickly treat this question and we'll go to.
Sorry, sir, before you mute, that B part, is it the same thing when they ask compose the income payable?
That what? That what? Can you type it? I can't get your question properly.
I said that G part, when they said compose and the income tax liability payable. Is it the same thing as when they say compose the tax payable? Is it the same thing?
Yes, sir, it's the same thing, sir. They want you to compute the company income tax liability. It's the same thing, sir. If I get your question properly, it's the same thing. They want you to compute the income tax payable for the relevant year of assessment. So the first question that will ask us is what is the year of assessment? What is the year of assessment? That's the first question.
2021. Oh, 2021.
Yeah, 2019.
2021.
1 year of
1 year of assessment.
But I heard 2019 before. Is it only me that heard it?
maybe it's a mistake.
No, sir.
Is it? Okay.
Please, I have a question.
Okay, what's the question?
Sir, please,
It's
on
a
that
slip
lot
of virus. It's a slip of virus.
if there's no additional information on it, you treat it as a disallowable expenses. Lots
Loss
of
of
funds.
funds. What
If
is
there's
causing
no
the loss of funds?
if there's no
You,
additional information,
you will disallow it. What is loss of
okay,
funds? What do they mean by
okay,
loss of funds? What is
okay,
causing it?
because I saw that they give us additional information. So
Once they put there loss of funds, misappropriation of money by auditor, accountant, blah blah blah. You know, concern us.
Okay,
Go and use the FCC or ICPC to pursue your money. Go and pursue your
Sir, one
recovery.
last question.
Okay.
I don't really understand the area of land acquisition in the additional information.
Okay. Did you participate in our first class?
No, I was not in the first class.
But you're supposed to have watched the video. Okay, let me just talk sharp. Let me just talk sharp. Okay. Part of the expense that is disallowed is expense that is capital in nature. What do you mean by expense that is capital in nature? In your IAS 16, if you purchase a motor vehicle, the money that you paid to purchase that motor vehicle may not necessarily be the only cost. There is what we call directly attributable cost. So in your IAS 16, what do you do with directly attributable cost? Do you expense it or you add it as part of the cost of the PPE?
It has to be capitalized.
It has to be added as part of the cost of the PPE. So you bought land and you now incur maybe all these legal people now, all these lawyers that they help you perfect the books, or what do they call it? Perfect documents, CFO, or what do they call that stuff now if you buy land now? CFO now, and other things, all this stuff. So far, you think it like this. If I didn't buy the land, if this company did not buy the land, will they incur this expense? Are you getting me, man? If they did not buy this land, will they incur these legal expenses on land acquisition? Definitely no. Definitely no. So that means the legal expenses on land acquisition should be directly attributable cost to the cost of the land. It should be capitalized with the cost of the land. I hope it is clear, man.
yes, sir. Thank you, sir.
Okay, please go and watch past video. Go and watch past video. Okay. Thank you. So it's time to meet everybody. Let's quickly solve this question to avoid distractions. Okay. Thank you so much. So I think I might have to share my screen. I'll be jogging through the question and coming to our Excel sheet. Then please, we'll try and solve this thing fast. Then if you have any question, I will allow you to ask your question. But we are treating loss relief today. Today. So anyhow we want it to, we must do it to. I hope that one is clear, and I hope we are all agreed. Let's do this thing sharp so that all of you can have a good time to prepare for the exam. Okay? Thank you for your agreement, even though I cannot hear from you guys, but I know you agree. And if you do not agree, I'll use veto power to make you agree. Okay, so this is the question, and I'll be sharing my Excel sheet, and we'll be looking at it together. So I'm solving this question. The first thing, the most important thing, is the name of the company, Shidan Limited. And we are doing computations of income tax liability payable for, please don't come and write relevant year of assessment here. Please don't come and write it. 2021 year of assessment. 2021 year of assessment. Okay, so please, you show the currency sign. I think they put the naira in 1,000, so let me put the naira in 1,000. I was in your class yesterday when the second lecturer was talking about the the naira in thousand. Please don't go and make the mistake. Oh, if you are not sure, just write your full naira and write everything in millions. But so that it will make your work to be to look somehow. Though it will make it to look somehow. So to do this, we are going to start with net profit reported as per their account. Net profit reported as per account. So what is the net profit reported as per account? 42,264. 42,264. That is the net profit reported as per account. Then we'll add back disallowed or disallowable expenses. Disallowed expenses. Disallowed expenses. If you do not remember anything, remember depreciation. So how much is the depreciation? 42,485. 42, is it 485? 42,825. 42,825. The depreciation. So now let's start going through the additional information. We said that, okay, the one that we are disallowing from this donation, we are disallowing motor boat club, polo club, and political parties, 300, 250, and 7.5. 300. Let me write it like this. Donations. 300, 250, 7,500. This one is for political parties. Political parties. Where is that one again? 250 is polo club and one is motorboat club. This is polo club, and this is for motorboat club, motorboat club. So we have disallowed that one. So let's move on to the next one. Roman figure 2. We said we are going to disallow the allowance for doubtful debt of 3,000 because they didn't say, they didn't put anything there. Allowance for doubtful debts, 3,000. Okay. The next one, Roman figure 3, court fine. Court fine will be disallowed. Court fine will be disallowed. Where are we disallowing court fine? You are the one that went to commit something bad, and the court is now fining you for that. So if you did not commit something bad, you are not going to incur this kind of expense. Okay. Then the loss of fund by director. Let me write director's fraud, loss of funds. That one is how much? 9,800 naira, 9.8 million. 9.8 million. And the last one here is the legal and professional fees on land acquisition. Land acquisition, legal and professional fees. And that one is how much is this? 3,750. 3,750. 3,750. Okay. Let's quickly look. Is there any other one that we're supposed to disallow? Is there another one? Any other one? Any other one? Any other one? I think this is all. This should be all. Okay, this should be all. This should be all. So what do? We are going to add it. We are going to total it and bring it to the zero or column now. Column of our where we have our net profit reported as per account figure. So we add it up together. This plus this. But in the question, we have the non-taxable income. And what is that non-taxable income? Profit on disposal of PPE. So I hope everybody understand that one where we are adding it back as a non-taxable income. Because what we are going to do on that should be our balancing charge or balancing allowance. That is what we are going to be doing. Then also take note, if you have loss on disposal of PPE, it is going to be part of your disallowed expenses. You are going to add it as part of your disallowed expenses. So please note that one now. Please know it now. Okay, so non-taxable income from the question. The non-taxable income that we have from the question is profit on disposal of PPE. And how much is that profit on disposal of PPE? 7,860. 7,860,000 naira. We are minusing it, Abi. So let me wear jacket for it. So what do we do now? This minus this is giving me what? 102,429. 102,429. This 102,429 now is my adjusted or my accessible profit. Please, adjusted or my accessible profit. After this one, what are we bringing next? We are going to bring our capital allowance. So you can see that I told us that in a 30 marks question, you can be lucky, they will supply the capital allowance for you free of charge, right? And also, you may be lucky, there's one question on Abdurrahman in, I think, November 2022, question number 1. If anybody should go and look at that question, you see that the question, it involves, you are going to do adjustment of profit, you are going to compute capital allowance, and you are going to be the one to do the tax liability. It's the 30 marks question. Meanwhile, I see this one. What are we doing here? Yeah, this is just an 18 marks question, but they now pack it up with so many things, right? So a question can come in different format like that. It's just for you to prepare yourself. And don't forget what I've told you. Question number 1, they like paying with any of these 4 topics. If it is not company income tax, either partnership tax, taxation of sole proprietorship, or taxation of employment income. Go and check. Question number 1, it is always on any of these 4 topics. But that does not mean I can stay put. They can change their mind and bring mainly theory for you in question number 1. You know, you cannot determine them, and there's no area of concentration. So what we need to do is to prepare ourselves. So in this particular question, capital allowance was supplied to you for free. So that means you don't need to go and be doing allocation of QC, blah blah to get they will now start computing your capital allowance. So capital allowance, agree with the revenue authority, is 30,380,000 naira. So bring it. Capital allowance for the year. Don't forget your naira is in thousand. So this one, 30,380 is what you write. So don't go and write 30,380 million. Oh, please be mindful of what you are doing. So what is the next? The next thing is for us to look at what is the restriction 66 to 3rd%. Restriction 66 to all over 3 of the adjusted profit of our AP, adjusted profit. So let me quickly do it here. 2 all over 3. I hope everybody understand this one. I know. If you don't understand this 66 to 3rd%, when you reach your group, we have opened that group. Everybody should go and be asking questions there. But please, let it be question on tax. And then don't come and bring any relevant chat into the group. Please, I'm begging us. So if you do not understand this 66 to 3rd, after this class, you can go to the group where you are, ask somebody there, ask the question there. I'm sure one of the lecturer to be, a student who is a lecturer to be, will attend to you very well. So 66 to 3rd of this adjusted profit, we have 68,286,000. So what does it mean? It means that we can fully claim this our capital allowance of 30,380,000 naira. We can fully claim that capital allowance of 30,280,000 naira. So here will be nil. What is this one? This is our capital allowance carry forward. Capital allowance carry forward is going to be nil. Abi, this is going to be nil. So what is the next one? Is for us to now compute what is our tax liability. What is the company taxable profit? Sorry, not tax liability, taxable profit. It's going to be the adjusted profit minus the capital allowance that the company claimed. So this is the company taxable profit. This is our taxable profit. So what is left? What is left for us is to compute the tax liability. Computation of tax liability. Computation of tax liabilities. Okay, that is what is remaining for us. Okay, what is going to be the tax liability? We have the company income tax. Company income tax. We have looked at the turnover. If you are not sure, let me show you the turnover of this company again. Let me show us the turnover of this company again. Where are you? The gross turnover of this company is 860,250 million. What does this mean? It means that this company is a large size company. What is the tax rate for a large size company? Please, they are going to supply you in the exam hall, though, the tax rate of that you are going to use. So this is going to be 30%. 30% of what? Of our taxable profit. Okay? 30% of our taxable profit. So 30% times taxable profit. What do you have? We have this particular figure, 21,614. Then we now have the tertiary education tax. Tertiary education tax. Education tax. As at the year that they share this question, I think tertiary education tax should be 2.5%, if I'm correct. But actually, they are going to supply you the rate that you are going to use in the exam. But I think the present rate should be either 3% or 3.5% for tertiary education tax. So what is tertiary education tax? Let me make an assumption that is 3%. Okay? 3% of what? Of our adjusted or accessible profit. Please take note. Don't go and do tertiary education tax on your taxable profit. It is on adjusted or accessible profit. So 3% times the adjusted profit, what do you have? We have this figure. So what is next is for us to add the two up together. This plus this. This is the Shidan Limited tax liability for 2021 YOA. For 2021 YOA. My brothers and my sisters, this is your 18 marks. What will make you not to take these 18 marks? It is what I don't know. And I don't want to know it. But this is a bonus 18 marks. This is a bonus 18 marks. So let me share only the solution. If you have any question, quickly raise up your hand. I will listen to your question. But please, don't come and ask me questions 66 to 12%. But if you ask, somebody will answer among us, though. So you are free to ask your question, though. 66 to 12%. If you ask your question, misconception and overthinking. What is causing overthinking? Did your girlfriend divorce you? Mr. Popolawale? What is causing overthinking? I beg Jare. Overthinking, Bawo. Okay. I have full questions. So before I answer questions of every guys, please. You see that sole proprietorship, company income tax, and partnership tax, which the one you treated yesterday, they are almost the same thing, right? What is making them the same? The way you treat the disallowable, allowable expenses, and non-taxable income. It is the same thing. Okay? And also the way you treated capital allowance. It is the same thing for the three, which is what make it like it makes it looks kind of interrelated. Where the difference is coming from is that when it comes to company, after you arrive at the taxable profit, you are going to apply the tax rate. You get the tax liability, company income tax, and tertiary education tax. For sole proprietorship and partnership, when it comes to sole proprietorship, once you arrive at the profit from the business, what do? You are switching to personal income tax. What do I mean by you are switching to personal income tax? You are bringing in statutory deductions. You are bringing in what do we call it? CRA. Then you now get the chargeable or taxable income for that individual. Then you now eat it with first 300,000, next 300,000, 500,000, 500,000, 1.6, and over 3.2. That one's sole proprietorship. Partnership. Once you arrive at the you treated capital allowance, what you are going to be arriving at is going to be the profit that you are going to distribute to the partners based on their profit sharing ratio. Okay, so once you share the profit to the partners based on their profit ratio, you are switching also to personal income tax. Now, the personal income tax will not be for the respective partners. You have to be recognizing what are the income for the respective partners, the share of profit, the interest they collected on capital, interest if they give, if any partner give loan, interest on the loan that the partner collected, and all those things you'll be bringing it in. You bring the statutory deduction if you have in the question. You bring CRA if you have it in the, you bring the CRA. You don't need to have that one in the question. That one is automatic. But from 2026, no, nothing like CRA again. So please, I want to beg you again, pass this task now. Pass this task now. What you just need to do is to update your knowledge of all the changes that are coming in 2026. You just need to update your knowledge. You don't need to come and be worrying yourself. What if they go and ask me 2020 before provision? They now ask me after provision. They now ask me after 2025 in 2026. Which one will I apply? So you don't need that. You know that you don't need to disturb yourself. You are pass it. You are pass it. Update your knowledge is what you need. Okay, updating your knowledge is what you need. So when you have done all those CRA for the respective partners, the next thing is to eat it with what? The partners, to eat it with first 300,000, 300,000, 300, 500,000, 500,000, 1.6, and over 3.2. So that is what is making it to be very, very easy. That is what is making. Please remind me, sole proprietorship, is it on actual year basis or preceding year basis? Please, somebody is asking us that question. Let me unmute so that I will listen to the question of every guy. So somebody is asking me the question in the chat. That please, I should remind you. Please remind me. Sole proprietorship, is it AYB or PYB? Please, can somebody help me answer that person? No.
Preceding year basis.
Okay, thank you so much. Preceding year basis. So let me quickly take our questions. And how many questions? 6 kilo day. 6 questions. But now this simple question. Oh yeah, Auntie Felade Foundation.
No,
Felade
no.
Foundation.
My question was based on the 66 to third, but
Oh, okay, that means. Oh, you want to ask that one? Okay. Just let me finish my loss relief, then I'll answer you. I'll answer you. Okay. Holiday, Mr. Joshua. Mr. Joshua, Holiday.
Yes, good evening.
Good evening, sir.
Hello, good evening.
Good evening, sir. Go on.
I just want to know why you did not take this Lagos Chamber of Commerce met. We did not take it as disallowable expenses.
Lagos Chamber of Commerce.
Yes.
Lagos Chamber of Commerce, Abi?
Yes, sir.
Okay. The company pays subscription now. Hold on. The company paid the subscription to be part of Lagos Chamber of Commerce. So the subscription was paid for Lagos State Chamber of Commerce. It's allowed. It's allowed when it comes to tax. It's allowed, sir.
All right, sir.
What's the next? Auntie Rebecca. Auntie Rebecca. No time. I'll call somebody else. So.
Applying.
Your network is not good. I can't hear you.
The minimum wage.
Please just type your question. I can't hear you at all, please. Rebecca, I can't hear you. Please, can you please just type your question?
Yeah, I have questions.
Just hold on. We'll get to you, sir. Mr. Peter Olasukomi.
Okay, hello, sir.
Okay, sir.
So my question is two questions I have. One is narrow, but that one I will ask it. The second one I will ask it after the class. After the
Okay.
class for not so. But the first one is this. I don't know the applicable laws because I'm having an issue in one of the foreign countries I currently hold. So all these their tax liability. So their computation, the way they compute it, I don't know, maybe they don't make use of all these capital allowance and have been dragging it with them. So what do you suggest we can do in that aspect?
Capital allowance, as the company, they don't make use of capital allowance, right?
Yes, in the countries like they were using it as disallowable.
Capital allowance. Which country is that?
Yes, Guinea.
Ah, well, maybe that's their tax law, but please, you need to let them know any income that is generated from Nigeria and they have any qualified capital expenditure that they bought in Nigeria and they are not a small size company. So I think let them know that the best thing for them is to, because I don't know if they now incur qualified capital expenditure, what are they now using to reduce their tax liability? Because capital allowance is used to reduce your chargeable tax accessible profit now to arrive at taxable profit.
Yes.
So maybe you need to get them to talk to a tax consultant in Nigeria so that the tax consultant can put them through.
Okay, in a case where all these our to compute our tax liability. Now that the company is just preparing the financial statement for the first time.
Okay.
After maybe 3 to 4 years of operations, but they don't have a valid financial statement. So how do we in that case now, if we are just preparing the financial statement, so I'm having issues with number one, the how to do the depreciation and all the assets, because most of the assets, should I just assume a figure and depreciation for the
No,
assets?
you cannot just assume a figure for the asset. There must be evidence of that they purchased the asset now in form of receipt.
There is no evidence. There's no evidence.
Yo, I won't lie for you, sir. Let me tell you the truth. Oh, that's yo. What do you want to use as a fact that you bought a qualified capital expenditure now? It's receipt now. It's receipt now. So don't be angry. I'm being straightforward. It's Oyo. It's Oyo.
That's part of what is everything is what is leading to all this back and forth.
Then this type of your company. So far they have a operating stuff in Nigeria. I think they should be under the purview of specialized business, though. They should be on the purview of specialized business. But let them talk to a tax consultant in Nigeria, okay? Let them talk to a tax consultant in Nigeria. That would be the best option for them. Are you clear, sir?
So yes, yes. The next question, maybe after the class.
Okay, no wala. Mr. Innocent. Mr. Innocent.
Yeah, good evening, sir.
Okay, good evening.
Good evening, sir. Can you hear me, sir?
Go on. Yeah, we can hear you. Everybody can hear you.
Yeah, it's based on this salary expenses because I'm just a bit confused now. I don't know. Actually, the salary expensive, if when you're adding back the salary, I thought it's something that does not concern any expenses that is
Disallowed expenses is going to be an expenses that was spent for the purpose of that and is not used to generate the profit. Your network is breaking and I have a limited time.
Sorry, sir. Can you hear me, sir?
Okay, I can hear you now, but please, you can please go and speak, please.
Can you hear me, sir? Hello, sir.
Can you type your question? Can you type your question, please? I may not be able to take all the questions. Please, just type your question, Mr. Innocent. Please. Guys, please, let's keep our question till loss relief, please. I think I need to go and treat loss relief, please. Let me treat question loss relief, then I will listen to the questions of everybody. Please, please, and please, and please, everyone. Okay, please, let's do it that way. Let me quickly through loss relief, then I'll answer the question of everybody. Thank you so much. Please don't be angry. Your question will be answered. Let's quickly through this loss relief, so we'll not be rushing ourselves when we are doing that. Thank you for your understanding, with this small boy. Don't be angry. There is a small boy that is telling you, ordering you that he cannot take question again. No. The small boy does not mean it. And it is a slip of tongue. Just as Mr. Joshua mentioned, it's a slip of tongue. Thank you. So let's quickly do loss relief and have a good time. Have a good time. Small boy, mighty lecturer. Eshi. Okay, loss relief. Yeah, please. One day I want us to treat a question on carry back of capital allowance. Please, please, please. I don't know when that day will be. I want us to treat a question on carry back of capital allowance. There's somebody that actually chatted me that, oh, how will you treat this thing? And maybe that person chatted me in my mind, say, hope they won't come and ask this question in exam. And we have not actually looked at it. So very fast, let's look at loss relief. So what is loss relief? First one is what is loss. Loss is when the expenses of a company is higher above the income of the company. So that means the company is going to make a loss in that particular year. So, but if a company should make a loss, the tax law allowed the company to do what? To relieve the loss against future profits. The tax law allowed the company to relieve the loss, not just company, both individuals also. And don't forget, when I'm talking about individuals, I'm talking about not just only you. I'm talking about sole proprietorship, partnership, taxation of trust, settlement, and estates. Don't forget, all those ones are under the purview of personal income tax. So they have been seen as individuals. Okay? So a company makes a loss from its trade or business when its allowable operating expenses exceed the total income or total earnings. A company that makes a loss from its trade or business is entitled to relieve such loss by carrying it forward for set-off against the assessable profit of subsequent assessment years, commencing from the year following that in which the loss occur. Let me increase. Okay. Let me increase it. Sorry. I think it's too much. Is it good like this? Someone is telling me to increase. Is it good? Adeola Adetunji. Okay. So, if the company should incur a loss, the tax law permits such company to relieve that loss against future profit in subsequent assessment years. Okay. So, when it comes to loss relief, we have two types of loss relief. We have the first one, we have what we call current year loss relief, and we have what we call carry forward loss relief. This loss relief question is the most simplest question I've ever seen in tax. And when did they tested it? I think they tested it either between 2022 and 2023. That was the last time they tested it. But it's a bonus question. It's a bonus question. Don't mind me, everything is bonus to me. So, but it's a bonus question in tax if you know what you are doing. So I was talking about we have two types of loss relief. We have the first one, current year loss relief, and we have the second one, carry forward loss relief. What is current year loss relief? This is one of the methods of relieving losses, but it is applicable to only individuals. It is also not available to property letting business. It is applicable to only individuals. In this case, losses incurred from a particular source of income can be relieved against other sources, including balancing charge. In order to enjoy this relief, a written claim must be made within 12 months after the end of the year of assessment in which the loss arises. Any unrelieved loss can only be set off against profit from the source from which the loss was incurred. Don't forget, current year loss relief is applicable to only individuals, but there must be a written claim that must be made within 12 months after the end of the year of assessment in which the loss arises. But I need to explain on this sentence, that in this case, I need to explain a little on this place. In this case, loss incurred from a particular source of income can be relieved against other source. What does it mean? Don't forget that you are treating loss relief of an individual. Let's now say, for example, we have a particular individual, there is a salary earner, and this individual also, right, he has his sole proprietorship business that he's managing from one side. If in a particular year of assessment, the sole proprietorship business, that means his trading business, that one made a loss in that particular year, he can redeem that loss and he has income from his salary employment or any other sources. He can relieve that loss of that particular trading business against the profit of the other sources. Then let's say, for example, let me make use of figures, please. Let me make use of figures. Let's say he made a loss in his trading business of 20 million naira, a loss of 20 million naira. He now made an income from his salary business, or from his salary, from his employment income. Sorry, let me use that word, employment income. He made an income, he has an income of like 5 million naira. So it means that in that particular year of assessment, he can relieve that loss of 20 million naira against another source of income from his employment income of 5 million naira. So he's now left with a loss of 15 million naira. That loss of 15 million naira now, he can carry it forward. But when he's carrying it forward, he cannot go and relieve that loss against every other sources of income. He can only relieve that loss against the income from the trading business in the future one that is carrying forward. That is what that sentence is saying for current year loss relief. The second one, carry forward loss relief. This relief is available again only against profit from the same source of income where the loss originally occurred. It does not require approval before the relief can be granted. The relief also applies to both individuals and companies. Please take note, this one is applicable to both individuals and companies. So that means companies can make use of carry forward loss relief. Take note, they don't need to write any written claim. They don't need any approval. Please take note also that the loss of one line of business cannot be relieved against other sources. What does this mean? If, for example, we have a group of companies that have different companies, there is a sugar company on its own, there is a legal entity, there is a cement illegal entity, there is a manufacturing illegal entity, there is agriculture illegal entity. If the sugar should make a loss and the other subsidiaries should make a profit, you cannot go and relieve the loss of sugar against the profit of others. Loss of sugar will be relieved against the profit that sugar company is going to be making in future years. So what are the rules on loss relief? What are the rules on loss relief? Please take note of these rules. A, trading loss to be deducted from assessable profit of an assessment year shall not exceed the actual loss incurred by the company in the previous assessment year. Don't go and package your loss. Don't go and make loss of in previous year. You made a loss of 2 million. You now want to relieve it. You package it to turn it to 3 million, or you increase it. Don't do it. Don't do it. Losses are not aggregated with accessible profit in computation of company income tax. In strict compliance with provision of section 31 of section 1 of CITA. A trading loss from one of the company's sources of profit cannot be set off against profit from another source. A loss incurred from a particular line of business can only be relieved in future years from accessible profit derived from the same source or line of business. E.g., mining company loss cannot be set off against income from any other line of business, say farming. Mining losses are going to be set off against mining income only, and farming losses can only be set off against farming loss only. Farming income only, sorry, not loss. I hope that one is clear. Okay. When loss incurred in two different assessment years are being carried forward against future profit, the first loss incurred will be relieved in priority to the subsequent loss. What does this mean? Let's say, for example, in 2020, a company made a loss of 5 million. In 2021, a loss of 2 million. Now in 2020, as I mentioned, 2021, 2022, the company now made a profit of 3 million naira. The first loss that you must relieve is the loss of 5 million naira. That is what you must first relieve. Don't go and say, oh, it be 3 million naira, and then the loss of 2021 is 2 million naira. Oh, let me relieve this 2 million naira first. Then I'll now come back to 5 million naira later. Don't do that. The first loss that you must relieve is the one of 5 million naira first. So any other one, you do what? You'll be carrying forward against future profit, When trading ceases, any terminal loss resulting therefrom which could not be relieved in the year of cessation due to insufficiency or non-availability of profit is deemed lost. Bye-bye. So there is no provision under the Nigerian tax system for carryback of terminal loss. You cannot carry back terminal loss. Loss is lost. Bye-bye to bye-bye loss. Then a claim for relief of losses take precedence over claim for capital allowance. I read the lecturer of yesterday talking about this. Before you can claim capital allowance, it means that you must have fully relieved all your losses before you can claim capital allowance. Then quickly, we are going to look at this small question. Small question. I'll read it fast so that I can manage the time. Owuru Nigeria Limited, an agricultural company, was incorporated on February 1, 2012. It commenced business on May 1, 2012. The company makes up its account to December 31 each year. We have the following adjusted profit for the years. We have year ended December 31, 2016, 80 million loss, 2017, 2018, 2019, 40, 20, 50 respectively. Then we now have capital allowance for the year of assessment. For each year of assessment, we have 2017, 2018, 2019, 2020. Then they gave us the turnover of the company to be what? 101,300,000. Once they give you this kind of question and they mention the turnover, you can see this turnover. What does it mean? It means that this company is what? It's a large size company. Now, I need to talk about this capital allowance and adjusted profit, because I remember in this question, when I read the examiner's comment, it said some students were not able to identify which capital allowance to use in a particular year of assessment. Year ended December 31, 2016, will be assessed to tax in 2017 year of assessment. So that means if you are doing 2017 year of assessment, you come and pick the capital allowance of 2017 year of assessment. A lot of students made an error in this aspect. They don't know which one to pick. So I hope this one is clear. Year ended December 31, 2017 is going to be 2018 year of assessment. So you come and pick the capital allowance of 2018 to treat that, and you quickly treat the question, and you forget about it, and you move on to another aspect of your question in the exam. Okay, so I'm going to be sharing my Excel sheet shortly. We'll solve this question as fast as we can. Then I will listen to your questions, which I'm sure there are a lot of questions. Are you guys doing FM this evening? I'm sure you are. So that means we need to finish as fast as we can, then so that all of you can have a good number of time to relax a little, at least a little, before you go to the next one. Good. Oh, okay, it's postponed. Okay, so that means we have a good number of time now. No wala now. So we'll listen to every question of everybody. Listen to questions of everybody. Oh yeah, everybody raise up a hand, but don't let it be 100 though. Okay, oh, no problem. Okay, please, can you see my Excel sheet? Good. Good. So let's quickly solve this question. That person on YouTube, do I need to increase my font? How this will be okay for that person on YouTube? Okay. So let's quickly solve this question. The company name is Owuru Nigeria Limited. Please take note. This is the first thing that you must write when you are solving a calculation questions in any of your computation class exam. FR, PM, FM, tax, PSAF, and the others that you have to do computation. Okay. Computation of income tax liability for relevant years of assessment. Okay. So I think the naira is given to us in thousand, right? So the naira is given to us in thousand. What's happening? Okay, the naira is given to us in thousand. Then I'm going to start with 2017 year of assessment. 2017 year of assessment. Okay, let me share my screen so that I'll be going through the question and I'll be going through the Excel sheet. Okay, let me share my full screen. I think that one will be better. God, good. Okay, 2017 year of assessment. We have an adjusted loss. Adjusted loss of how much? 80,000. Please take note, the naira is in thousand, so which we are writing it in thousand. So there's nothing to be relieved here. So loss relieved will be 0. Will be nil. So that means, hey, 80,000 is loss. So loss, please. What I'm writing is profit. Okay. So we call this loss. Let me call it unrelieved loss carry forward. Unrelieved loss carry forward. Then our capital allowance for the year. How much is our capital allowance from the year, from the question? Please take note, we are doing 2017 year of assessment. So we are going to pick capital allowance of 2017. Okay, capital allowance of 2017. How much is the capital allowance? 5 million naira. But because we are doing naira in thousand, so we are writing 5,000 naira. Can we claim capital allowance? Capital allowance claimed. Can we claim any capital allowance? Definitely no. So this is no. You cannot claim any capital allowance. Then this capital allowance unclaimed, we are going to call it capital allowance unclaimed carry forward. Capital allowance unclaimed carry forward. So now, do we have any taxable profits? We don't have taxable profit because we have a loss, unrelieved loss that we are here to relieve. So our taxable profit is nil. Okay. So our CIT, company income tax, 30% of what? Of the taxable profit, 30% of TP. Our TP is nil. So that means our 30% company income tax will also be nil. Then education tax, EDT. Let me assume 3%. Let me assume 3% of 3% of the adjusted profit. Okay, 3% of the adjusted profit. We don't have adjusted profit. What we have is loss. So that means this one also will be nil. This one also will be nil. So we are done with 2017 year of assessment. So let's move on to 2018. 2018 years of assessment. 2018 year of assessment. Okay. I think in this one we have adjusted profits. I think we have adjusted profit of 40,000. Adjusted profit of 40,000. Then we have unrelieved loss, brought forward, no longer carry forward. Unrelieved loss brought forward. How much is that unrelieved loss? 80 million minus 80 million. Okay, so that means we are still having how much? A loss, unrelieved loss of how much? 40,000 naira. So we are going to carry this one forward. Unrelieved loss carry forward is now how much? 40,000 naira. Okay, so now capital allowance for the year. Capital allowance for the year. How much is your capital allowance for the year in 2018? 3,500. 3,500. Then you bring the capital allowance unclaimed brought forward, which is 5,000 naira. So we add the two together, we are going to be having 8,500 naira. Then this is going to be capital allowance claimable. Capital allowance claimable. Can we claim any capital allowance? Definitely no. We cannot claim capital allowance. Don't forget the rule. Rule F. Rule F says that where is that rule? A claim for relief of losses take precedence over claim for capital allowance. So until we relieve all these losses, that is when we can claim capital allowance. Until we relieve all these losses, that is when we can claim capital allowance. So that means for this particular one, capital allowance claimed is going to be zero because we still have unrelieved losses that we are yet to do. So what do we do? 8,500. What do we call this 8,500? Capital allowance unclaimed carry forward. Capital allowance unclaimed carry forward. 8,500. Now, do we have taxable profit? Let me copy this one and bring it here. Do you have taxable profit? Definitely, our taxable profit is still nil because we still have unrelieved losses. Then do we have CIT? No, our CIT also is still nil because that one is based on 30% of taxable profit, and our taxable profit is zero. So 30% of zero is zero. But do we have tertiary education tax? Yes. Why? Tertiary education tax is based on adjusted profit. So that means 3% times this figure. So this is going to be the company tax liability for 2018 year of assessment. The company tax liability for 2018 year of assessment is going to be 1,200,000 naira. 1,200,000 naira. So let's move on. The next year, 2019 year of assessment. 2019 year of assessment. Okay. Please permit me to copy all this. Okay. For 2019 year of assessment, according to the question, 2018 year of assessment, we are making use of 31st December 2018. No, please. So we have a profit of 20 million naira, 20,000 naira, 20 million naira. Okay. But we still have unrelieved loss. Unrelieved loss of how much? 40,000 naira. 40,000 naira. So that means we cannot fully relieve all these losses. We are still going to carry forward how much? We are carrying forward unrelieved loss of how much? 20,000 naira. Unrelieved loss of 20,000 naira. So what do we do next? You bring in the information of your capital allowance. Please let me just copy this one also, so that we can move and solve this thing faster. You can see nothing is in this question. What is the capital allowance? 2,700, right? Capital allowance for the year. What is the capital allowance unclaimed carry forward? 8,500. Now, what is the capital allowance claimable? This plus this, 11,200. What is the capital allowance that can claim? Is zero. We cannot claim anything. So that means we are going to have this 11,200 as our capital allowance unclaimed carry forward. So the same thing, do you have taxable profit? Do we have taxable profit? Definitely no, we don't have taxable profit. So our taxable profit is still nil because we are here to relieve all the losses. CIT is also going to be nil because it's based on taxable profit, and that one is nil. Then this man is going to be based on 3% of 20 million naira. So the tertiary education tax is going to be how much? 600,000 naira. 600,000 naira. So let's do the last one. 2020 year of assessment. 2020 year of assessment. Now the company made a boom profit. Good. Adjusted profit, we have 50 million naira. Okay, 50 million naira. Then unrelieved loss brought forward, that one is 20 million naira. Then this, we have this and this. So that means now the company has what do we call it? A residual profit, please. A residual profit. This is not your adjusted profit, oh, please. They have already given you adjusted profit in the question. So don't go and talk this 30,000 as your adjusted profit. This is not your adjusted profit. So what is left is for us to bring in our capital allowance. So that means we don't have any unrelieved loss again. We don't have any unrelieved loss again. We don't have any unrelieved loss again. So let me bring in my capital allowance down. What is my capital allowance for the year? In the question, 2,500. 2,500. Capital allowance on claim brought forward, 11,200. Capital allowance, what did I press? I pressed control down. Apologies. Okay. Capital allowance unclaimed, capital allowance claimable, sorry. 2,005 plus 11,200. So we have 13,700. So now what is capital allowance claimable? What is capital allowance claimable? Sorry, claimed. Claimed. What is capital allowance claimed? Now, you are going to be doing the restriction of 66 to 30% of your of this figure. Please don't go and use this figure. Please don't go and use 50,000. It's going to be 30,000 naira. It's going to be 30,000 naira. So 2/3, 12 over 3 of 30,000 is giving me 20,000. I don't need to calculate that one. So that means I can fully claim my capital allowance of 13,700. Okay. So I'm still going to have this figure here. Then I'll come here. My capital allowance on claim carry forward will be nil. Abi, this one will be nil. That is capital allowance on claim carry forward will be nil. Okay, it's going to be nil. Then what is going to be my taxable profit? I think now there's a taxable profit. This minus this. Okay, so this is now our taxable profit. This is profit. This is now our taxable profit. Then CIT. Our CIT is going to be 30% of taxable profit. Please take note. 30% of taxable profit. So 30% times this. Okay. Then tertiary education tax, 3% of what? Of 50,000. Please take note, 50% and 3% of 50,000. So what do we do next? We add it up together. That is the tax liability of the company for 2020 year of assessment. So company income tax liability is this figure that you have. So a loss relief question cannot be more than this. Any technicality they may want to bring is maybe they will bring a loss profit nest. I think that question in either between November 2022 and 2023, they brought that question, but they changed it a little. but it cannot be more than this. It cannot be more than this. Okay, so thank you. So this is the length of loss relief. Now it's time. Let me listen to your questions. I hope we are still together. Hope nobody is lost. Nobody is lost among us. So everybody is good. Okay. So that's the solution. So let me quickly listen to you guys' question. But before I listen to you guys' question, let me quickly read the comments from people, whether there's any question for me. Somebody said I'm too fast. Yeah, I'm sorry. I'm very, very sorry. I'm very, very sorry. I was the one to gotten. Okay, somebody has answered. Thank you so much, Angela. Cool lecturer. Thank you so much. It's good one. Everybody that's helping me to answer, everyone. Thank you so much. I appreciate. Yeah, you guys are trying to be good lecturers. We have always assumed that partnership between them. What happens when companies other than so true guys? How we do? Mr. Andrew, Mr. Andrew, maybe you raise your hand and you ask this question. How? Okay. How will the tax computation like? What? Wait. We have always assumed that a partnership is between individuals. What happens when companies other than sole traders into a partnership? How will it? The so far is a partnership business. The profit of the business will be shared to the different partners. So whether it's a company, there's no way a company can be a partnership business. It's not possible. If it is a partnership business, then the profit of the partnership will be shared to the different partners. Okay. So, but I hope I've answered your question. If I have not, you can raise up your hand and then you can ask your question. Then I will listen to you. Maybe I'll get the better understanding of it very well. Then I'll know where to come in. So thank you. I hope we are still together. I hope all of us understand loss relief. Sincerely, I must tell us the truth. Any loss relief question that they want to ask you, it cannot be more than this. It cannot be more than this. Maybe a little technicality that they may want to bring. It cannot be more than this. Okay? So let me quickly listen to your questions. And in the title, entry supposed to put the correct year of assessment. Now. So you now want to write 2017 year of assessment, 2018 year of assessment, 2019 year of assessment, 2020 year of assessment. No, now. No, you can show it like this. You can see that when I solve it, I wrote 2017 year of assessment. When I was done, I moved to the next year of assessment. Then we solve it up to the last one, 2020 year of assessment. Okay? So, Mr. Peter, are you still raising your hand or is the old hand? Mr. Peter. Okay, Miriam.
Yes. Good evening, sir.
Can I ask the question now?
Wait, I've called Miriam. Let me listen to Miriam first. I'll call you after Miriam.
Okay, good evening, sir. So
Okay.
my first question is about the company income tax. Actually, I came across one question that we were told to compute capital allowance, and the company is just starting. So the capital allowance that was computed was for 2 years, the first year and the second year. So I'm not sure which of the capital allowance you are to use for the computation of that tax liability, or if we are to add the capital allowance of the 2 years together and
Don't try
claim
it.
it.
Don't try it. Don't add the capital allowance of the 2 years of assessment together. Don't try it, please.
So which one are we to use for that kind of question?
First, I want to ask you one question. When we did capital allowance, were you in class?
No.
Because this is your question. It shows you are not in class. Okay, before you can do capital allowance, okay, you have to, maybe our advice you go and watch the video. Go and watch the video. Okay. So before you can do capital allowance, you must do basis period. I hope you know how to do basis period for commencement very well.
Yes.
So the way we do basis period, you are going to do by the side basis period of capital allowance. Then you now do allocation of QC. Don't forget that when you are doing basis period of the profit, you are getting year of assessment beside it, right? Then the allocation of the QC will now be based on the date of purchase of the QC. Where can you get it in the basis period of the capital allowance? That's when you are going to determine allocation of the QC. Then if you allocate a particular QC to, let's say, you have 2020 year of assessment, you have 2021 year of assessment. If you allocated the QCE to a 2020 year of assessment, then you need to start computing capital allowance for 2020 year of assessment. I would advise you to go and watch the video actually on capital allowance. So
No
that
problem. Thank you about that, sir. So the next question is about this loss relief that we just treated now.
okay.
So I want to ask that the loss for that first year that we are carrying forward and relieving from other years, for how long can we relieve that loss, or we can just be relieving it till we are done with the loss?
As long as this loss exists, and it's
Oh.
not a packaging loss. I hope you understand that word.
No.
Okay. A packaging loss, you cook the loss. That's what it means. As long as it's not a loss that you cooked.
Okay. Okay. Thank you, sir. Thank you, sir.
As long as it's not a loss that you cooked. But if it's a genuine loss, keep relieving your loss. But don't be surprised. Oh, in real life, if such a company is making the loss, they're expecting tax authority people to come and do a thorough audit. A thorough audit. I mean thorough audit of all your books. Okay? So where is that man? Mr.
Yes,
Peter. Is it Mr. Peter?
Yes.
Okay, oh yeah, fast.
Firstly, I think I've understand this one of the mistake, because actually the business in the Guinea Conakry started in 2019. So over the years, they refused to prepare a financial statement. So everyone that has been employed over there to represent the company, the tax consultant, so they all engage in embezzlement and everything. So nobody prepared the financial statement for the tax authority. So I think 2024, the tax, they themselves now compute their own
Test of judgment. Test of judgment assessment.
So they computed it. So and they are
Test of
giving.
judgment now. They
They are
carry your
giving.
company. Yes, now you pay it now. So far you said no accessible profit and no books of accounts. You don't
So they
contact them.
give. They bring close to, I think, 800 million for
Yay!
the close to, and after, so when I prepared the accounts.
As you refuse to prepare now.
I prepared when I came on board. I prepared the account, and actually, I think first mistake I saw here, I added all the fraud amount. I added it to the expenses. I think
Okay.
I think that's the first thing I see that they are adding back.
Okay, you better go and get a qualified auditor to help you audit your books properly, to help you prepare it.
So, but now, what I'm now, we've even done that now, but my first question is, now they are insisting that we can't contest all this fraud. We can't just accept what the tax I bring forward.
When they supply you the letter, did you respond to them immediately?
It took after a month. I think after a month before we respond.
Abushe, you are a Yoruba man now. You understand?
Yes.
It is finished. The law says if you respond to them within 30 days. If you do not respond to them within 30 days, final and conclusive. Say go be.
So even after preparing the
final and conclusive, the law is the law. Ignorance of the law is not an excuse.
It's not an
law.
excuse.
It will seek equity, must do equity. I should remember some maximum of equity, the small. So if you do not respond to them within 30 days that is not being letter, it has become final and conclusive. It has become final and conclusive.
The company will liquidate if they pay that.
Bros, don't let us waste time on this. Go and get a tax consultant. Let the tax consultant go with you. Then you people should don't go with I know tax law. Don't go with me on my account. I know tax law, but don't go with that.
In fact, actually, I've dragged it with them a little to some extent now.
You are the one that you have to go and talk with them calmly, gently, like someone that really needs to. They are human beings. Sometimes they can actually bend the rule. They can actually bend the rules. But but if you have gone there, what do they worry you? Blah, 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 you now come later. No, they won't listen to you. They won't listen to you. Okay, so our advice will just get a task consultant, right? To help you out on all this stuff. Then get an auditor. But Baba, go and
So you
fast
said
and
I'm
pray.
gonna
Go
answer my
and fast
question.
and pray on it. Okay.
All
So
right.
Michael Shimanda. Michael Shimanda.
Question is based on my question is based on the rule 6. I mean rule B, the rule B of the tax relief.
Okay.
When we are talking about current year relief, like the law says that we can relieve laws that was made from different line of business, right? For example, using Dangote cement, like Dangote cement made loss, I can use a profit from Dangote sugar to relieve Dangote cement.
For current year loss relief.
Yes.
Current year loss relief.
Yes.
Is Dangote sugar an individual?
No.
No.
So I hope we have answered. We have answered you. We, not only me. We have
It's based
answered
on
you.
individual.
Current year loss relief is for only individuals.
Okay.
Carry forward relief is what a company can use.
Okay.
Thank God you asked that question. They will not ask you explain current year loss relief. You're not going to mention current year loss relief. Dangote, please. Thank God you asked that question. Thank God you asked that question. So we have settled that one. Mr. Lazarus, please let's make our questions sharp, straight to the point, and simple. Mr. Lazarus.
Yeah. Good evening, sir.
Good evening, sir.
So my question is based on the 66 to third. I want to know, is this also applicable to partnership and sole proprietorship taxation, sir?
Is applicable, sir.
Okay. It's just that the one that we have been solving based on our last classes, I didn't see something like that.
Maybe they decide not to put it. Maybe the person just look at it at all. This we don't need to do this 66 to 30%. Maybe from clarity, the figures is just straightforward. So you don't need to do it.
Okay, sir.
Okay. Yeah. Where is that Madam Fella Day?
It's still the same thing.
Okay, you have raised your hand. Okay, Madam Fella Day, you have something to say?
Shall call me now?
I will call you, please. Mr. Samson Oyebola. Don't worry, it will soon get to your turn, Auntie Lucy. Mr. Samson Oyebola.
Yes, sir. I'm with you, sir. Thank you so much, sir.
You raise up your hand.
Can you hear me, sir?
I can hear you, sir.
Yes, sir. This is just a kind of clarification, sir, concerning the 66 to third. I think what is confusing some of us is that I can say it is a slang, 66 to third. So people that are having issue with 66 to third should just, if they divide 2 by 3, it will give them 66.66667. That is 2 portions out of 3. So maybe they should be clear on that.
I'm sure maybe you didn't join my first class when I practiced this, but I show it clearly and I said it that, okay, this 66 to 30%, you don't need to be doing 3 times 66. At least I still remember that primary school maths, Abi. Is it fraction number? What do they call this kind of stuff? That will not do 3 times 66 plus 2. Will not do it, blah, blah, blah. You don't need that. I said it that you just do 2/3 of the profit. Now, if you do 2/3 of the profit, it's the same thing that you will get if you go and be solving 66 to 30% times the adjusted profit. So I think that is just the clarity. You don't need to be doing 66 to 30%. Just do 2/3 of the taxable profit. You are going to get the same figure. I hope it's clear, sir.
2/3, yes.
Okay.
Yes.
Thank you, sir. My boss, Igbayima. My boss. Let me answer my boss, my shaman. Oh, yeah, Mr. Igbayima.
Sir, I want to ask,
most times in practice, these things are a bit different. Like when you are assessing a company to tax, you are assessing based on preceding year basis.
Yes.
Then when you are computing capital allowance, you are computing based on actual year basis.
That is wrong.
Is it also on preceding?
It's supposed to be on the year of assessment. That means if they purchase, that means they purchase the assets, let's say 2024. Right?
Okay.
Let's say they purchase the assets in financial accounting year of 2024. So that means it's going to be in 2025 year of assessment now.
Because if you look at this question
When you are
now,
talking about actual year basis, that means the asset that you purchase in 2025, the QC that you purchase in 2025, you are bringing the capital allowance in 2025 year of assessment.
So I was thinking if you are assessing the profit to tax based on preceding year basis,
yes,
and then this other one based on actual, if assets were purchased in 2017 and you are taxing the profit of 2016, 2017, by the time you are assessing that company to tax, that asset must not have been purchased. So I'm only thinking, I'm just confused.
No. You know, when we are doing capital allowance, right? When we are doing capital allowance, we form the basis period of capital allowance, right? And the basis we did basis period of accessible profit, we did basis period of capital allowance. Then before we did the basis period of capital allowance, when we did basis period of accessible profit, we now got the year of assessment. Abi, I hope you can still remember. We got the year of assessment, and we based that one on preceding year basis, right? So that means when we do that one, we now started the allocation of the QCE. When we started the allocation of the QCE, the next thing is for us to move to, we did the allocation of the QCE, looking at the date of purchase, and we went and looked at the date of capital allowance. That, okay, where can I get this date in capital allowance? Then we did the allocation of the QCE to that particular date that we get in capital allowance. Then we link it up to the year of assessment. We now started computation of the capital allowance from that year of assessment. So that means for this particular question, right? For this particular question, year ended December 31, 2016, will be subjected to tax in 2017 year of assessment. And the capital allowance they gave to you, they specifically mention year of assessment in it.
Okay, I understand now.
They specifically mention year of assessment in it. And I think part of question that you asked is part of what the examiner's report said, that a lot of students were making mistake. That so they said that the one that did 2016, some of them did not. 2016 year ended December 2016 is going to be 2017 year of assessment, right? So it's going to be 20 year of assessment. Then that they did not know how to pick the relevant capital allowance for the relevant years for them to treat. So they made mention of it very well. I hope that is clear, sir.
Yes, sir.
Okay. Auntie Amadi Lucy, you should be the next person now. What happened? Amadi Lucy.
Finally, sir.
Okay, finally.
I'm just curious, because I don't want to make the same mistake I made when I first wrote tax.
No mistake again.
Amen.
According to the format in company income tax and the rest, they say we should add back the salariable and less allowable. But I noticed that in calculations, we don't usually put all the allowable expense. We just select few. Like, I don't understand why.
You want to do double reduction now. You want to cook goods with that too. Because you know, from the net profit reported now, they have already treated the allowable expenses. They have already minus it from the profit now to arrive at net profit.
Okay.
If you now start treating it again, that means you are doing mago. You want to manage the company profits. You want to minus it again. You can only come and deduct the allowable expenses if in the question they specifically stated that, oh, this expense was not treated.
Okay.
This allowable expense was not treated. That is when you come and minus it. But if in the question they have already deducted all those expenses from the profit, don't come and treat it again.
Okay.
Don't come and treat it again.
No problem. Thank you, sir. And please, employment income, just I've forgotten. Employment, whatever, is it on actual year basis?
My fellow lecturers,
Preceding
employment
year
income.
basis.
Employment income.
Income is actual.
Employment income is on actual year basis.
Employment income in actual year basis. Your tax, where you are working, the tax that they deducted from your salary, they must pay it that same month, that same year. Sorry, not same month. That same year, they must pay it that same year.
Actually.
Okay.
Okay. All right, sir.
So I've answered you, Abi.
Exactly.
So you can help me drop your hand. Thank you.
Thank you, sir.
Mr. Samson Yebola, are you still raising your hand? Mr. Oriade.
No, sir.
Oriade.
Hello, sir. Yes, I'm here, sir. Good evening, sir.
Good evening, sir.
Yes, sir. My question is actually on a CRA. That's a consolidated relief allowance. Actually, there was a question that was tweeted by our lecturer yesterday. That's a misfavor, but I found something cumbersome there. So the CRA is saying that 1% of accessible profit, or 200,000 plus 20% of accessible profit. But in that Excel sheet, while we were doing the calculation, I'm seeing that we did 1% of accessible profit. Then we added another 20% of accessible profit to that one.
Did you call it
That one
accessible
aside,
profit?
then we no,
Well, go on,
sir? Hello?
Go on.
Oh, sorry, like our gross income, I mean, not accessible profit, gross
I
income,
must
sorry.
because I trust
So,
my lecturer.
no,
He's
it's
senior
a gross
lecturer.
income.
He's
It's a,
senior
that,
me.
I know.
Okay.
I'm not
Sorry, sir.
senior.
That one is there on my part. It's actually good. Oh,
Hello,
Mr.
sir.
Mo, yeah, good evening, madam.
Go on
Good
with
evening.
your
So what
question.
I want to say there is that what I wanted to say there is after we've computed 1% and 20%, we added that one separately. Then we now do another 200,000 and 20%. So it's kind of cumbersome. I was actually expecting 1% of gross
Let me
income
clarify
separately.
you.
Then we do 200,000 plus. Thank you, sir.
Let me clarify you. And Abi, Madam Favor, do you want to talk?
Yeah, let me just explain.
Okay.
Since I'm here, let me talk. It's almost time. So what we did, the rule says 1% of gross profit or 200,000. So it's a case of whichever is higher. So if you do 1% of the gross profit and it is higher than 200,000, you pick the 1% and you leave 200,000. Then that 20% is constant. That 20% is constant. So anyone you pick out of the two, you are still going to do 20% and add it to the one that is higher than the one you have picked.
So in a nutshell now, either we are doing the 1% or the 200,000, we still have to compute 20% for both.
Yes, that's
20%.
it.
All right. Okay, no problem, sir. Thank you, sir.
Are you
Thank you,
the
Madam Favor.
accountant
I
in your
actually get
company?
it right.
How have you been preparing it in your company? I hope you have not been.
No. That's I say that.
I hope you have not been.
Thank you, sir. Thank you,
Don't let
madam.
me talk. No problem.
I've not been doing mago.
Okay. I didn't say that too. I said I hope you have not been. I didn't say anything after that one. No, everybody can hear me. Falade Foundation.
You already okay. This is about the 66 to third.
Okay. You want me to answer you now?
Yes.
Okay.
Yes.
Oh yeah, let me answer you. But can I treat Michael Miriam before I answer you? Michael Miriam.
No problem.
Okay. Michael's Miriam.
Good evening, sir.
Good evening, man. Are you related to Shawn Michaels?
No, sir.
Okay, go on.
So okay, it's on that 66 to third restriction. I just wanted to get a clarification
Okay.
when it is claimable and when it is not claimable, because you said in this last question that we did now, you said the capital allowance is claimable. I want to know, is it when the restriction is higher than the capital allowance?
Okay, so your
Or
question and Madam Felade is the same thing, right?
yes.
Okay, good. Thank you. So let me quickly show you this 66 to third. Hope you guys are seeing. And somebody is even asking me on YouTube too, 66 to third. How do we use 66 to third percent? Okay, in loss really. Just do to third. Adola Adetunji, just do 12 over 3 of the adjusted profits to get the 66 to third percent. Okay, I hope you can see my screen, right? I hope you can see my screen. Okay, let's say for example,
Yes, sir.
let's say for example, a company have an adjusted profit of like which figure did I use that deal? I can't remember the figure. Let me just use any figure.
I can't see the screen more.
Please, can you see my screen?
No,
Yes,
yes, sir.
yes, sir. We can see your screen.
Just look at and log in.
Sir, I can hear you, but I cannot see the screen.
Maybe you log out and log in again.
Come back.
Log out and log in again. It should be your network.
No.
But we have done it before now. It's not for everybody, Josh. It's for people that didn't know it, Josh. Madam
Okay, sir.
Jennifer, you know it now. You're supposed to be the one to teach yourself. Take you be talking, let me be typing. She's laughing. Okay, so let me quickly do it. Sorry, please, quietness, please. I need quietness, okay? Now, let's say, for example, a company adjusted profit is 2 million naira, and the capital allowance for the year is like let's say, for example, the capital allowance for the year. What is it?
I can't see your screen. No.
Log out and log in back, please.
Don't worry. Let me solve it. If you cannot see it now, then that means your network. Oh. What about now?
It's better now, sir.
Okay, so I was giving an instances for the two people that asked me question on capital allowance on that restriction of 66 to 12%. Okay, let's say a company adjusted profit. Please let me change this one to 3 million so that it can be easy for me, right? So I can easily make my assessment. Let's say the company adjusted profit is 3 million, right? And the capital allowance for the year is 2,500,000. The capital allowance for the year is 2,500,000. Then you bring in restriction. We just need to write this 66 to third. 66 12 over 3% of the adjusted profit of the AP. What does this mean? Just I told you, you just do 12 over 3 of adjusted profit. Let's say, for example, I did 2 divided by 3 times the adjusted profit. What do you see? What can you see here? What is this 2/3? What can you see in this 2/3? Jennifer and say, sorry, it's not Jennifer. Opelade and Miriam's 2 million naira. Okay, you can see that this 2/3 of adjusted profit is 2 million naira. But capital allowance for the year is 2.5 million naira. So it means that if you have a kind of question like this, the capital allowance that you can claim, which is going to be restricted to 66 to 3%, is going to be only 2 million naira.
Mm-hmm.
Do you get?
Yes, sir.
Okay.
Yes, sir.
So the unclaimed capital allowance of 500,000, you are going to do what? You are going to carry it forward into the next year of assessment. Okay. So that means in this kind of situation, you cannot fully claim this capital allowance of 2.5 million naira. I hope that one is clear. I hope that is clear. Okay. So now let's now say, for example, the company profit is like 3 million naira, then the capital allowance is now 1.5 million naira. 1.5 million naira. When you do 2/3 of this adjusted profit, we still have 2 million naira. In this kind of situation, it means that you can fully claim your capital allowance of 1.5 million naira. I hope you get it now. I hope it's clear.
Yes, sir.
Then to my own, that 66 is confusing. We should just say to third.
Just do 12/3. 12/3 of the adjusted profit, please. Don't waste your time. But you need to write, don't go and write restitution of 12/3 of adjusted profit, oh, please. You need to
Okay, you
write
should still be putting 66 there.
66 to 3%, please. That is the law.
66 that is confusing someone now. Just to third is okay.
It's the mathematician people. The mathematician people, they are the one that now got it that, oh, instead of doing this 3 times 66 plus 2, just do 12/3 of your adjusted profit. It will give you the same answer. It will give you the same answer. I hope that is clear, please.
Yes, sir.
Okay. So I'm sure no more question. I'm sure no more question.
Sir, check the chat now.
Question again. Chat again. So how do we do that to third? I've talked about it. So 20% of gross income. Okay. Fellow lecturers are helping me to answer some. So no more questions. I've checked the charts and I believe everybody is good. So what do you need to work on? Go and work on the salable and allowable expenses.
Salable and allowable expenses.
Non-taxable income. Go and work on it. Go and work on donations. The list of companies that you can make donations to that will be allowed in tax. Go and work on it. Then go and work on the sizes of the company. And please, I want to beg you again, pass this task, this diet. Because from 2026, many changes are coming. Many changes are coming. Okay? So thank you guys for being online up to this moment. Kilo today.
Please help us.
What do you say, Mr. Larewaju?
Yes. Please help us send the sheet when we're done. Eshegon.
This answer stuff, Abi?
Yeah, the sheet, yes, sir.
Okay. No one. I will send it.
Hello, sir.
Yes, sir.
Sir, you just said 3 things now. I didn't get. Say go and work on. I didn't get you, sir.
I said go and work on identifying the salable and allowable expenses. Go and work on identifying non-taxable income. Then go and work on the list of organizations where donations can be made and it will be allowed in tax. Anti-favor, you can talk, man.
Okay, so I just want to add to what Mr. Mike had said. From the question that most of us are asking in the group and in the DM, in my DM, it shows that a lot of us are not practicing. I just want to encourage us to go and practice. Go and practice past questions, because that's another way you get exposed to the different things. All of these things will not come in one question, and you don't know the question that is coming or the item that will come in a particular question. So let's just build that habit of practicing questions when that relates to a particular topic. So that's what I want to add.
Okay, thank you, ma. My Agba lecturer, respect.
It's only Agba.
Question, please.
Okay, so I'm sure no more questions. So please, guys.
Sir, last one. Yes, sir, please, I beg.
Oh, yeah, last question from you.
Please, sir, I beg no vex. Let me not go and do 66 to 3rd when I'm not supposed to do it. How do we know that we are to do 66 to 3rd? Make I not go do it when I'm not supposed to do it.
You must show it, especially when you are doing capital allowance. When you get to the period where you are showing computing capital allowance for the year, so it is important for you to show this restriction of 66 to 3%, especially for companies. Especially for companies. I hope you saw what we did for Shidan Limited.
Yes, sir. The subbing is, I know how to do the subbing, but how do I know that I am to do it?
How do you know that you have to do it? Go and look at the format.
Because there are some people that they don't.
And sometimes they don't show it. sometimes the examiner just assume that I don't need to show it, as in the Pathfinder, right? But nothing is wrong if you show it, especially when you have looked at the capital allowance and you quickly press your calculator, 2/3 of your adjusted profit. You see that the 2/3 of your adjusted profit is not up to your capital allowance claimable. So that means you need to show that restriction.
Okay.
Yeah? Okay. How that is clear?
Okay, sir.
Okay.
Yeah, it's
So
very
you
clear.
said we should work on what? Thanks. Abba. I said you should work on identifying disallowable and allowable expenses. Proper. Go and read that one very well. Identifying what are non-taxable income that has been added in the profit. Go and work on that very well. Then also the list of organizations that donations can be made in tax, that donations can be made and it will be allowed as an allowable expenses in taxation. Okay.
You don't. Why go down for leg?
So I can see a question. Just have it at the back of your mind that the total capital allowance. I can't get this question from this.
Make you rest. Drop out for some me rest. Is it charged?
5 hours before hours is around 4 or around 3.
Wait till you want to do. You want for leg like this. Drop out, put it out for your face. Oh,
so
sorry.
thank you guys. It's good to have you guys online, and I'm sure everybody is good. So please go and pick up your Pathfinder. No time to waste time. Exam is like a month away or a month and some days. Let's say probably 40 days. So please don't pile up the books until November before you say you want to start preparing for the exam. Thank you for staying up to this time. See you when we see again.
Thank you, sir. Good night.
And good night.
Thank you.
Yeah.
Thank you, sir.
Thank you. Good night.
Good night, sir.
Good night.
Good night.